Okay, hi guys, Zaheer Anwari here on behalf of the Dynamic Trader. I hope you're well. Can I get a quick hello that you can hear me, that you can see my screen? Administrator, if I can, yep, sound is fine. And can you see the ebook? Yep, no ebook. Okay, bear with me 1 second. Okay, I think hopefully you should be able to see the ebook now. Yeah, okay, fine. All right, brilliant. Okay, so hi guys, Zaheer Anwari here. Just a brief background of myself. I'm a long-term trend trader. Regular visitors to my weekly videos, my weekly webinars for FX Street will be very familiar with my approach. What I look for are long-term opportunities in the markets. And when I say long-term, I do mean long-term. I'm looking for weeks to months as opposed to what most traders do, which is generally be in and out on the same day. I'm not a day trader. I don't look for short moves. I'm not a scalper. I'm looking for low risk, high reward opportunities in the market. So the initial allocation of risk is small, typically 2% or less of my account, but by holding my positions and compounding as the trends develop, the reward is far greater. So often I'm asked, what is my risk to reward? That's a very common question that people ask me as a trader. And that is because most people that come into trading will have some kind of risk to reward, and it's usually fixed 1-to-1, 1-to-2, 1-to-3. You've all heard the expression, the trend is your friend until the bend at the end. The trend is your friend until the bend at the end. So what that means is that a trend can be in play for long periods of time. So if you're limiting your reward with a limit, with a fixed target, so 1-to-1, 1-to-2, 1-to-3, whatever it may be, you're actually limiting the profit and the growth on your trading account. And you want to reverse that philosophy. And why I say reverse that philosophy is because a lot of private traders end up blowing their accounts. So what is that telling you? What that tells you is that they keep their losses uncapped, hence why they blow their accounts and get margin called, and they're too quick to take profit. And that's usually because of fear of loss of profit, maybe a bit of greed if you're over risking. What you want is a slow and steady approach to the market, but one that's very powerful once the trends come into play and you compound. That's how the money will then start effortlessly coming into your trading account and will grow your account to substantial sums of money. Many of the techniques that I use are covered in this fantastic ebook. So if you don't have this ebook as yet, please check it out. To get hold of the ebook, just email me, zaheer@zaheeranwari.com. So it's just my name, zaheer@zaheeranwari.com. The amazing lady who wrote this ebook is a wonderful lady by the name of Anne Chapman. Anne taught me how to trade back in 2007. So Anne is actually my mentor. It's a fantastic book. If I just scroll down to the contents, beyond the introduction, you can see that there's 12 chapters, 12 lessons, if you like, of in-depth understanding of trading and technical analysis. Just be one aware, guys. Look at this word here, almost. This is not the holy grail. This is not the answer. Beyond this, there's more. There's training, there's software, there's understanding, there's practice, there's knowledge. There's a lot more to trading, but this ebook will really start giving you the foundation of the best approach to trading for us as private traders. And this is really important. Private traders often go down the route of day trading and scalping, and that's because it's plastered all over the internet. As soon as you go onto the internet, you put in FX trading, you'll probably be come across some kind of broker. If there's not some kind of broker, it'll be some kind of forum or some kind of education system that's going to teach you how to make money very quickly. 10 pips a day, 20 pips a day, that's all you need, etc., etc. The reality is that has a very, very low success rate. You guys know that. I know that. Everyone pretty much knows that. There is a very low success rate to this kind of approach. So what you need to start doing is rethinking your approach and thinking, how can I make my journey more consistent, less stressful, in fact, no stress, and just bring a pleasant more journey to trading. And that's by stepping back and looking at the bigger picture, looking at the monthly, the weekly, the daily time frame, understanding how to uh, establish market environments, understand trends, understand breakouts, pullbacks. There's just so much to trading. It's all covered in this ebook. So please email me, zaheer@zaheeranwari.com. And it's 60 pages, guys, of in-depth understanding all the way through to what a trading plan should be. So for me, this is quite possibly the best publication out there when it comes to technical analysis. There's nothing that compares to this, because most books are either oversimplified, they either use outdated techniques, or they focus on one thing such as candlesticks and then explain that as the way to make money. What you want is to be able to understand everything like a jigsaw, piece it all together, and then create an overall picture of what trading's about. So please check this out. Email me, zaheer@zaheeranwari.com. Okay, before we get into the analysis, I also want to announce a date for all of you guys who are based here in the UK. Of course, you can fly in if you're abroad, if you're in the EU. On the 17th of February, I'm doing a live day of training at the Hilton Hotel near Heathrow Airport. It's £195 plus VAT, lunch included, snacks, coffee. It's going to be a fantastic day where we go through a whole load of trading, all the way from the basics all the way through to advanced techniques, where you guys will actually be trained in strategies. So you'll be trained in a breakout strategy, a pullback strategy. I'll be covering FX, stocks, just a lot of information in a single day that will really revolutionize the way you approach the market. Spaces are limited. There's only 30 places, and these are already getting booked up. So I only do small classes. I don't do hundreds of people. Small, slow and steady, and we move on from there. So if you're interested, please check out zaheer.live/seminar. Okay, it's a landing page where there's a bit of information on there. All you need to do is book your ticket. If you are outside the EU and you want to come in, then you don't pay the VAT. Okay, guys, let's move on. Let's get into the actual analysis. Administrator, can you see my charts, please? If you can just give me a yes or a no that you can see my e-signal. Yeah, okay, fantastic. Okay, brilliant. So, as already mentioned, I'm a trend trader. And as I've already mentioned, as a trend trader, I want to look for long-term opportunities in the market. And for that reason, I need to have the right time frames that allow me to trade in that way. If I'm trading on the 5-minute time frame, it's highly likely that I'm going to get stopped out within minutes. If I'm on the larger time frames, like the hour, 1 hour, 1 hour, 2 hour, 4 hour, very likely going to be stopped out intraday at some point. Maybe be able to hold positions for a day or two, but generally the lower down you go, the more noise there is. When you start stepping back, and when I say noise, guys, I mean candlesticks. There's a lot more candlesticks. There's a lot more intraday movements going on. By stepping back and looking at the bigger picture, you get a much clearer idea of trends. It's a far simpler approach. Now, don't mistake simple for easy. This is where people go wrong. It's a far simpler approach. That means you really need to do less. There is little to do on the larger time frames, but far more profit to be made. It's a concept that many private traders find very difficult to accept, but you have to look at people that are successful. Go back decades. You have people like Jesse Livermore. You have Richard Dennis, who created the Turtle Traders. You have John W. Henry, the owner of Boston Red Sox and Liverpool Football Club. You've got people like Jim Rogers, George Soros, Warren Buffett. Yes, I know some of them are investors, but ultimately the underlying philosophy is the same, which is enter at a particular point, usually with a low risk, and hold for long periods of time. That's how you grow an account. And as that starts moving in your favor, start adding to those positions. Always add to winning positions. Never add to losing positions. To add to losing positions, guys, you've got to have pockets deep enough. Someone like Warren Buffett, George Soros, Jim Rogers, these guys can add to losing positions because their pockets are deep enough. In addition, they can hold positions in negative for 5 years if they wanted because their pockets are deep enough. As private traders, our pockets aren't as deep as Warren Buffett to want to have to allocate your risk tied up for 5 years. There's no way I would want my risk tied up for 5 years, because in 5 years I can see excellent growth elsewhere. And for that reason, you also want to have foreign exchange, stocks, commodities within your portfolio. Okay, so never add to losing positions. Let the position start moving in your favor. As it starts returning a profit, then start scaling in or adding or compounding, however you want to call it. Okay, now, first and foremost, price. That is my main indicator. My decisions are based primarily on what price is suggesting. However, I need to have other factors within my chart that can then start giving me high probability environments, because that's what we're looking for. Focusing on price just on its own can be done, but it's more difficult. But understanding how to use moving averages and support and resistance, you get a better picture of what price is doing and what kind of environment you're in. So if we start with the monthly time frame, the monthly time frame is where I have all my levels of support and resistance. So if I just simplify this for a second, I'm just going to remove the pink lines. Okay, so what you can see are the major pivots. So the red and the green lines, these are all major pivots. What is the logic behind this? These pivots are all explained in the ebook. You don't want to have any subjectivity in your trading. There must be a specific rule for every part of your trading, a very specific rule. So for example, if you're drawing in a trend line, you've got to know which 2 points you want to click on to draw the trend line. You don't want to draw a trend line just because that feels like a trend line. There shouldn't be any emotions or feelings. There should be very strategic rules. Major pivots. Why is the software highlighting? And by the way, the software does this automatically. It's not something that I sit here manually doing. If you've got free software, I'm sure a lot of you guys appreciate the amount of time that goes into drawing support and resistance. For me, my time is valuable. I don't want to be drawing support and resistance. I'd rather pay for good software that draws the support and resistance for me. That's part and parcel of why private traders go wrong. They spend too much time doing things that are unnecessary and less time doing things that are necessary, i.e. learning and understanding the correct things rather than drawing support and resistance for hours a day. So I've got good software that does this for me. And you can see here, if I just expand the chart, there's this green line appearing here. That's because the software has detected this now as a new major pivot support level. So the software does it all for me. Green are support, red are resistance, but of course support becomes resistance, resistance becomes support when these levels are broken. The pink lines represent the annual levels of the previous calendar year. As we're in 2017, this is the high, the low, and the close of 2016. What am I looking for? I'm looking for price to be trading outside of these pink lines. Outside. If price is inside the pink lines, I generally stand aside. Of course, sometimes you can place trades, but those are more advanced techniques. For now, understand very simply that if price is inside the pink lines, I'm not looking to trade, particularly if the market's in consolidation. If price breaks out above the high, it has a bullish bias. Below the low, it has a bearish bias. If it's inside the pink lines, it's a consolidation. We're trading on probabilities. You want to be able to identify areas where you have more chance of making money than losing money. And I've had this conversation with many a private trader who's blown an account, who comes to me and says, look, I'm not having any success. Can you teach me? And I'm like, yeah, sure. Let's talk about what you've done so far, how you've traded so far. And a lot of the times people will say to me, well, I've blown at least one trading account. Many have blown multiple trading accounts. And when you try and pick their brain and say, why exactly did you blow your account? There isn't a clear answer, because traders don't know how to trade, and at the same time, they don't understand why they're blowing a trading account. The simple answer is that they don't understand high probability environments. It's a simple sentence that one should be able to state, but they don't. So that's what we want to be able to do. You want to have an edge. An edge is where you have more chance of making money than losing money. If price is inside the pink lines, it generally has no edge. You can see it's just bouncing all over the place. The edge is when the market is in trend, like here, like here, like here. This is an edge. This is where the edge is. And by playing out your edge over many trades, that is how you're going to grow an account. And remember one thing, guys, you don't need to have a high percentage success rate to have a good account. It's another fallacy. People usually come to me and say, Zaheer, what's your success rate? They expect me to tell them 70%, 80%, 90%. It doesn't make sense because one trade can blow an account. You can have a success rate of 5% and be a multimillionaire because those 5% you've allowed to run for as long as possible and you've compounded. So don't focus on how many winners you have. Focus on how large your winners are. It's a very, very different philosophy. Okay, so that's the monthly. Look for price to be outside the pink lines. The weekly, I have the 200 moving average and I have a proprietary trend filter. So you can see I have red, black and green. So below the 200 moving average, I'm looking for the trend filter to be red. That's on the weekly. And on the daily, I also have the 200 moving average and the trend filter to be red. So what am I looking for in the weekly and daily? What I'm looking for is alignment. I'm looking for price to be moving in the same direction. Look at weekly as the big brother, daily as the little brother. If weekly is moving down, you want daily to be following. If weekly is moving up, you want the daily to be following. If we don't have alignment, we stand aside. Now, the 200 moving average, guys, if you're not aware of this, is significant. It's been used from before the internet to give price a bias. So if price is above the 200, we look for bullish opportunities as the bias is bullish. Below the 200, the bias is bearish. We look for shorting opportunities. Institutions use that same philosophy today. And that's the philosophy that you want to have. The 200 simple moving average should be a standard on your larger timeframes. I don't use it on the monthly because it's too slow. Weekly and daily. Okay, so if we look at the Aussie dollar, just to summarize all of this, inside the pink lines, and for that reason, I don't want to trade this. Looking at the weekly, we're below the weekly 200, but the trend filter is black. And we're above the daily 200 and the trend filter is black. So there's absolutely no trend direction on this. Why people would be even considering trading the Aussie dollar, US dollar is beyond me. So let's start putting that together and look for opportunities. Now, I have a big watch list. As you can see here, I have everything. Aussie dollar, US dollar at the top, goes all the way down to South African rand, Japanese yen at the bottom. I have a big watch list. Why do I have a big watch list? Because I want to move between one set of trending currencies to another. Money moves from market to market, from currency to currency. If you're just focused on the euro dollar all day long, you're not going to make the money that you want because the euro dollar, as we're going to look at right now, for many months now, it's been in consolidation. If we look at the euro dollar, we can see, first of all, if I open it up, it's still inside the pink lines. If we look prior to that, we can see it's just in a consolidation. The consolidation goes back to March of 2015. So we're coming up to 2 years of consolidation. You should be able to recognize it's in consolidation. This is a trend. This is a consolidation. Until it breaks out of this this consolidation, I'm not interested in taking any trades. And my bias is with a shorting trend, my bias is with a bearish trend presenting itself, and that's because the trend prior to consolidation was bearish. So we want a bearish trend going forward. Okay, weekly. Below the weekly, there's your consolidation. Now look, guys, if you look at the trend prior, 1.4 to 1.1, that's a 3,000 pip trend. After every trend, the market consolidates. It's a natural feature. So this is where the market makers are. This is where they're pushing the market. This is where the market makers leave. And this is where you've got pretty much day traders sat there losing a lot of money. If you look at the trend filter, it's red. But if you look at the trend filter now, it's alternating between red black and green. It's the trend filter is highlighting a consolidation. So we want a fixed trend filter. If you go to the daily, we have the exact same scenario. So if I go back to where the trend was, you can see it's predominantly red. Yes, there'll be periods of black, which is expected because there's a lot more candles, maybe the odd bit of green, but it's predominantly red, suggesting a bear trend. However, if you look at what's happening now, it's a consolidation. Red, black, and green. Very, very messy. If you look at what price is currently doing, if I just compress it, we can see that price came to this support level, broke through it, and has reversed back up. Fake breakout. Trader's remorse. This is where a lot of people get in too early, thinking that they found an entry into a trend, potentially going short. Market goes against them, takes them out. If they're not using stop losses, there's a potential blown account. Until this starts actually breaking out of consolidation and establishing a trend, I'll be standing aside on this. So I don't usually get in so early. I like to wait at least 2 breakouts to before looking to enter any positions. 2 breakouts. This was just the first breakout. If I draw the next area of, if I draw the next area of support that was here, if price had broken and closed at the end of the day, this is when I would have potentially started entering short positions. Now, of course, it could have still gone against me, but that's part and parcel of trading. That is why your stops, should be wide, first and foremost, but secondly, why your risks should always be small. Think in terms of risk to reward. The risk is small. If it goes against me, stops me out. However, the reward going forward is huge. Look at the reward going forward. You've got the low of 2000 at the round number 0.8. If you guys aren't familiar with round numbers, you must be. And round numbers are a very good way of allowing your positions to run. So if you look at the highest point here, it's 1.6, which is a round number. If you look at these 2 peaks here, 1.5, round number. If you look at this point here, 1.4, round number. If you look at this floor, significant floor, 1.2, round number. If you look at this consolidation, it's happening around 1.1, so round number. So what we want is price to move towards 1, 0.9, 0.8. And that is how you can leave your positions open and let them run. Instead of having a fixed risk to reward, use trailing stop losses and let price run and move towards these round numbers. Okay, so euro dollar on the weekly, below the weekly, you can see that it's just messy and it's a black, the trend filter is black. On the daily, below the 200, which is good, but trend filter is green. So for that reason, not something that I'm interested in trading. Okay, let's have a look at the euro Turkish lira. Now, the Turkish lira is a currency that has been talked about quite a bit on the media, etc. From a technical perspective, it's looking very, very interesting. So you've got the euro Turkish lira. We can see it is in a bullish trend. In recent times, it's been, well, if you go to the history rather, it's been very choppy. When I say choppy, deep pullbacks, but it seems to be smoothening out here. What we want is a nice trend, a nice fast moving trend. We don't want these deep pullbacks because that's where you're going to get stopped out. And if a currency does tend to have a lot of deep pullbacks, maybe you don't want to trade it. If we go to the weekly, above the weekly 200, trend filter is green. And above the daily 200, trend filter is predominantly green, apart from this little bit of breather here. We can see now strength happening to the upside. What we want to see now are resistance levels cleared. So if we take this level here, we can see there's a resistance level. Price, look at this, guys, textbook move, retest of the round number 4, and we're now having a bounce to the upside. So exactly what price does is there are these natural features that you must learn to embrace if you are to be consistent with your trading. You've got to embrace the natural features of the price. All too often, people see this as some kind of battle. It's like a war, me against the market. It's a very wrong approach. It's a wrong philosophy. What you want to do is align yourself with the market. Understand how she moves. Understand her natural rhythms. Understand what kind of trend structure she may be in. Is it a fast moving trend or a slow moving trend? When you start understanding these features of trading, it becomes very simple. And then it becomes easy, not straight away. But you've got to go through that process. So for me personally, Euro Turkish Lira, I'm not long on this as yet, but this is now starting to look interesting. A break and a close, a break and close. And when I say close, at the end of the day, so that's 10 p.m. UK time, not intraday, not 1 hour time frames at midday or anything like that, at the end of the day. So let's say, for example, if this continues today, big bullish bar, if it closes above here by 10 p.m. UK time, I'll consider putting in an entry. Until then, I'll be standing aside. Let's have a look at some of the pound currencies. Now, I am short on the pound currencies. You can see that it's in a bearish trend. Finding support at 1.2. Again, there's a round number. It's not just a random level. 1.2 is a round number. Weekly, below the weekly, it's going through this area of consolidation. And daily, below the daily, and again, this prolonged area of consolidation. I've been short since around this area here. I've been short since around this area here. So this has now moved into profit and is now gone against me. I'm not out of this trade as yet. I'm still live. If it goes any further, then I'll look to tighten my stops and I'll take a small hit. I know people will be thinking, well, why didn't you close your positions here? Well, for me, this is a tiny move. If we look at a stock that I'm currently long on, which is Nvidia. Oops, excuse me, I didn't incorrectly. Okay, if we look at Nvidia, we can see that this, I've been in since a break and a close above $40. $40, this is going back to May of last year. And I'm still long on this. And we're now above $100. Price came back to retest $100 and is now starting to suggest strength to the upside. This is what trading's all about. This stock has returned me significant amount of profit. Okay, and it's not the only stock I'm in. There's a host of other stocks that I'm in. So if we look at AMAT, this is another stock that I'm in, and you can see it's performing very well. But look at the structure. It's far different to the structure of Nvidia. Nvidia was quite a fast moving stock. This is a much slower moving stock. I like to balance out my portfolio with fast moving instruments with slow moving instruments. It's not just always about having a fast moving trend. Balance your portfolio out. That's another skill to trading. Okay, so AMAT, I've been in this since I think it was around this area here, if I remember correctly, this breakout. So this is going back to last year. Again, good profit. Again, much slower, but with all the compounds that I've got running, this is returning very good profit. Okay, so let's continue. Pound Aussie dollar, pretty significant move taking place on the pound Aussie dollar. Again, I am short on this. Bearish trend to the downside. You can see it's stuck in this area of consolidation. Below the weekly 200, and there's your area of consolidation. And if you go to the daily, below the daily 200, trend filter is now black. So pullback is pretty deep. Trend filters turn to black. Again, I'm still short on this. I've been short since around this level here. So I've been short with good profits. This is now gone against me. If I get stopped out, I get stopped out, and I'll look for the next opportunities. Okay, pound New Zealand dollar as well. I'm also short on, and you can see why. Trend is bearish. Broke through the all-time low. This is now acting as a resistance. I'm now looking for further weakness to the downside. Below the weekly 200, in an area of consolidation. Below the daily 200, there's your consolidation in more detail. Okay, so we looked at the pound, excuse me, we looked at the pound dollar, pound Aussie dollar, pound Kiwi. All of them are pound currencies, and they're all displaying the same characteristics, which is they're all bearish in terms of the 200 moving average, but they're all stuck in consolidation in terms of what the trend is suggesting. So for this reason, you want to be standing aside. If you're not in this, you want to be standing aside. If you are in this, and if you are short, you want to be looking closely at what price is suggesting and then managing your trades accordingly. You don't want to react too quickly. You don't want to react in haste. Wait until the end of the day and then make an informed decision. If you need to get out, you need to get out. Focus on the downside, focus on capital protection. This is just a trend that hasn't worked out. And the pound is all over the place at the moment, given Brexit and all the speeches that Theresa May is saying and et cetera, you know, that it's all over the place. It's almost acting like an exotic currency, which is strange, but that's the nature of trading. We just have to look elsewhere. So the currencies that are looking interesting, as already mentioned, are the TRY currencies, the Turkish lira. So I'm long on the US dollar Turkish lira, and you can see why. Long period of consolidation. So the bigger the consolidation, the bigger the breakout. Price broke out, came to 2, broke through 2, retested 2, went up to the round number 3, went into consolidation, nice move back up, round number 4, acting as consolidation. So you can rather acting as resistance. So you can see how price reacts to round numbers on this particular currency. Weekly time frame, above the weekly 200, trend filter is green. So we have alignment in the bias, alignment in the trend. Both are bullish, bullish bias, bullish trend. And on the daily, above the daily 200, trend filter is now green after turning black a little bit. But regardless, this is now going through a bit of a mini consolidation and it's suggesting strength to the upside. Still not out of the woods yet. I've got, I think I've got 2 or 3 positions. I can't remember exactly. I've got a few positions running on here. If price breaks and closes above this level, I still won't enter a compound. And the reason for that is because the round number 4 also needs to be cleared. So once price breaks and closes above the round number 4 and starts heading towards 5, that's when I'll start entering more positions. That's when I'll start compounding. Okay, and the final currency that we'll look at, a currency that I'm also not in as yet, but one that's very much on my watch list, is the Turkish lira. Trend is bearish, below all the major levels of support, which are now all acting as resistance. Weekly, below the weekly 200, trend filter is red, moving quite nicely. Daily, below the daily 200, trend filter is red, just one black bar. Again, look at what's happened. Move to the downside, 30. Price found a level of support around here. Price pulled back towards this resistance, this pivot resistance. It can't be any more textbook. I mean, it's to the pip, pretty much to the pip. You can't get any more textbook than that. Price came towards 30, bounced up towards this level of resistance, and is now suggesting further weakness to the downside. Understanding your levels of support and resistance are fundamental to trading. Price comes first, without a doubt, but support and resistance and moving averages, they come a very close second. All of this is explained in the ebook in more detail. If you're not in it, if you haven't read it, then please email me, zaheer@zaheeranwari.com. But I cannot stress enough how significant support and resistance levels are. And here is the proof in the pudding. Price pulled back and then just pulled back at some random level. If it had cleared that level, then it would have likely gone to this level. And if it had cleared that, then potentially we could be seeing a price looking to move towards 200 simple moving average. But ultimately, price doesn't move in a straight line. Pretty big move. If you take it from here, a pretty big move. So it had to go through a period of consolidation, but now we're looking for a trend continuation. Okay, let's have a look at one more currency. We'll have a look at the dollar yen. Okay, so the dollar yen price was in this bullish trend, came to major resistance, failed, came to 100 support, now bouncing up to the upside, 120 resistance. We're now seeing potentially a bearish engulfing candle. Above the weekly 200, trend filter is black. Above the daily 200, trend filter is red. So, not one that you want to get involved in just as yet, but once it does establish a trend direction, then that's when you want to be looking to allocate risk. But we've just looked at Turkish lira currencies. They look far more appealing than this, which is in no man's land at the moment. Okay. I think that is all the analysis that I wanted to do in currencies. Let's have a quick look at some of the stocks that I have running. So UK stocks, I've mentioned Boo before. So Boohoo is a UK stock that I've been in. This is a very good performing stock. This is the monthly chart, guys. Weekly trend filter is green. There isn't a 200 moving average because it's quite a new stock. And the daily is black. So if we look at a scenario like this, as long as the weekly remains green, I don't need to worry about what's happening on the daily because there's more candles, there's more noise on the lower down you go. The weekly, as long as it remains green, we're in a positive place. What we're now looking for is, again, look at this, guys. This is just not random movements. This is all part and parcel of trading, understanding what's happening here. So if I draw all of these pivot levels, these are all acting as resistance. So we had price breakthrough, fake breakout, came to retest a support level, tried again, failed, acting as resistance, came back down, another support level, gap up through the resistance, which are now support. Look at the retest. Price came to retest it to the T, perfect. Move up, another retest. We're now looking for the next move up. So you can see how significant these levels are. So when price starts pulling back, we can engage in potential levels that price may move back towards. I'm already long on this. If price breaks and closes above this pivot, if and when price breaks above this pivot, I will look to start adding further compounds. Okay, and one other stock that we'll look at, which is a UK stock, is CAS Minerals. This is a stock that has offered a compounding opportunity, and you can see why. Oh, excuse me. No, we don't want that. Don't know why I keep on going for that. Okay, there we go. So you can see there are some resistance levels which are now acting as support. Price has broken through. What I'm now looking for is a retest, so price to reverse, retest this level, and then a breakout to the upside. If you look, we have almost a head and shoulders pattern. So there's your, sorry, not head and shoulders, excuse me, cup and handle. There's your cup, there's your handle. I say almost because I am quite specific about these things. And I don't like the fact that we've had some wick spike through it. I ideally would have liked to see those wicks below the resistance, but we've had a bit of a wick through it, and for that reason this isn't a true cup and handle for me. But we do have a cup and handle in essence. And what is a cup and handle? It's a continuation pattern of the bull trend. Okay, so double bottoms, triple bottoms, inverted head and shoulders, cup and handles, they all mean the same thing, which is a continuation of the bull trend. We've got that happening now. I've had a compound triggered. I'm now looking to add further positions on further, either a breakout or a pullback, depending on what price is suggesting. Okay, that is everything. Let me have a look at the questions. Let me see if there are any questions. Okay, doesn't seem to be any questions here. Right, so to end the webinar, let me just direct you once again to my social media. So if you just bear with me 1 second. Okay, so I think, excuse me, I think you can see this page. So as already mentioned, February 17th, live day of training at the Hilton Hotel. It's £195 plus VAT for the day. That includes lunch. Just a lot of information, a lot of goodies and perks that come with the day of training, like a month of support, training in UK and US stocks, watch lists, currencies, weekly webinars. There's just a lot that goes into it. So great value for money. So please check out the following website, zaheer.live/seminar. If you're not in the UK and you'd like to do the training, please check out the following website, which is tdtpro.trade. And it's the exact same thing, but it's online. I've just today been published in the New York Observer. I was approached last week by one of the editors asking me if they could publish one of my articles which they had found on Medium. If you guys aren't aware of Medium, Hi, presenter. Do you have your premium website? Yes, I do have the premium website. So I've just seen your question. Yep, I can definitely direct you to the premium website. So the premium website would be the dynamic trader .com. Now, one thing to note: this website is this website has been renovated or recreated, and they're going to go live before the end of the month. So we have brand spanking new websites going live. This is quite an old website, but that is the premium website to get an idea of the bespoke one-to-one training. So the apprentice live training is an entry-level training course. Beyond that, there will be bespoke one-to-one training if that's the route that you choose to go down. All the details are on there. If you want to know more details as well, please email me as always, Zaheer@ZaheerAnwari.com. Okay. So yes, just to go back, Medium is this here. If you've not heard of Medium, or if you've not been on Medium before, please follow me. Please check out my articles. I blog on there pretty much every day, some aspect of trading, whether it be from a technical perspective, hints and tips, advice. I've got some really good articles on here. And so one of the articles, as you can see, which is this article here, which I published on the 2nd of January, has now been published on the homepage of the New York Observer. Gentleman approached me last week. He really liked the article, wanted to publish it on the homepage. I believe that, I could be wrong, but from what I understand, Donald Trump's son-in-law owns this website. Don't quote me on that, but I think that's just from some conversation that I've had. And it has got quite a big following. So I think it's about 50,000 hits a day on the homepage. Okay, so just been published there, but you can see the same articles here on medium.com. If you are on LinkedIn, please follow me, please add me. And if you're on Facebook, please add me on Facebook, Zaheer.Anwari. I've also got a Facebook page, which is City Trader Lifestyle. So if you're just a private trader in London, if you just search for that, or if you want to just put in the URL, which is facebook.com/City Trader Lifestyle, either or, please like my page, please follow me on my social media, please get in touch with me for the ebook. I'll have that out for you ASAP. Any questions regarding the live training, the one-to-one training, the webinars, please also get in touch with me. Okay, I hope you found that useful. Administrator, thank you for today. Guys, have a lovely end to the week. Be smart with your trading. Be safe. Be different. Be different, guys. Focus on capital protection. Focus on protecting your money. Don't give it away cheaply. You guys have worked really, really hard for that money. Why would you want to give it away cheaply? Use that as a foundation and a basis to grow wealth. If you have any questions on risk management, etc., please contact me as well. Okay, right. Have a wonderful end to the week, and see you all on my next webinar. FX Street Administrator, thank you. Bye-bye.